Let's introduce our next guest. He is Ozan Özgüral, founder and managing partner at Tanto Capital Partners. Ozan, great to see you once again. I would start the conversation exactly looking at this resurgence of the narrative around political interference with the Fed. What did you make of those comments that we aired just moments ago, suggesting indeed that it's impossible for the Fed to be siloed from the political developments at a time when, of course, there's these growing expectations too about what's going to happen to the chair?
Well, look, I think it's important to distinguish signal from noise in situations like this. There's a lot of talk about independence of Fed, and by the way, central banks on the whole. Now, central banks are never truly indifferent to what goes on within the countries that they are a part of, and Fed is no exception to that rule. Given the current volatility around how to tackle inflation, but how to also at the same time incentivize growth in a more, I would say, maybe policy-driven environment, I don't think there is anything to be concerned about. I do think that all of this is much of a noise. I think when it comes down to it, the independence and decision-making capacity of the Fed will not really be impacted by the rhetoric and the political rhetoric that is going around today.
You say that, but ultimately, it's also hard for central bank to continue, whatever central bank, to do their jobs when you had, in the case of the Fed, one of the members leaving already. There's now this pressure on Lisa Cook. There's question marks. There have been question marks for the longest time in terms of President Trump potentially replacing Jerome Powell too. So how can the Fed also do their job when there's so much uncertainty about their members and who is actually going to stay at the Fed?
I think it's a great question, but I think we have to understand that this has always been the case. Fed chairs get replaced by presidents when their term's up. That's just a part of the cycle of democratically elected governments appointing different central bank governors when their time is due. And the responsibility of the members of central banks, and including the Fed, is to truly see through the political noise that goes around them and then act truly independently, taking market force dynamics and also the geopolitical and the policy spectrum that they have to operate within under advisement and then move forward. So honestly, yes, it does sound like it's a volatile time when it comes to the independence of central banks, but their jobs and the members of the Fed, their jobs is to really see through the signal and see through the noise rather, and then focus on doing what is right in their opinion. Now, I think we can say that markets, and then the way the markets are reacting to all of this populism, fragmentation, fiscal pressures, everything is really weighing on sentiment, Sylvia.
So that brings me to my next question. We're going to hear from Jerome Powell. So speaking about them doing their jobs and focusing on the data as well, what do you think? What are your expectations from this speech, given that this is likely to be his last time at the Jackson Hole Symposium?
You know, I think his speech will be heavy on symbolism, underlying the importance of having an independent central bank, as most Fed chairs would do at this stage in their careers. And I think he will emphasize that U.S. markets and the systems in place are strong enough to withstand any political noise and rhetoric. That's my expectation. I wouldn't expect anything else. I don't think there's much to read about when the cut cycle will really kick off, just because there is no upside unless there is true and substantive guidance coming out of Jackson Hole.
Let's talk about what we have witnessed in the equity world this week. There has been this rotation. We have seen investors raising concerns about valuations for some of the big tech names. I'm wondering whether you are part of that sentiment, whether you share that sentiment, and whether you have also changed some of the positions in this context.
Sure. Look, I am long AI, big tech, generally speaking, for one reason and one reason alone. We are at a point in time where our lives, the way we do business, the way we conduct our lives are changing, and it's going to change logarithmically going forward. And this is going to be driven by tech, not just AI, quantum computing to AI, to robotics, to all sorts of new technologies. So from that perspective, I try to and tend to take a longer term macro view, and I am long tech stocks overall. Now, of course, there'll be differentiation. But if you take a step back and look at the broader equity markets, I think that depending on what jurisdiction you're looking at, there needs to be a very disciplined selection across different sectors. And broadly speaking, I think we are entering a cycle where the real opportunity really is in taking great public companies private, because public markets are punishing them for uncertainty. But private ownership tends to free management from quarterly pressures that allows them to really create long-term value creation, just because it is very difficult for the boards of these companies to look at quarter-to-quarter dynamics and at the same time take a step back and look at reducing inefficiency and also retooling to prepare them to really have a fighting chance in this new world that we are living in. Now, certain jurisdictions have it easier than others, and Europe is not one of them. I think Europe is going to struggle significantly when it comes to the current macro dynamics again.
Well, let's see what's going to happen, because so far Europe has done quite well so far this year. But I want to stay the conversation keep it focused on AI for a moment. One of the reasons also why we saw some pressure when it comes to some of the performances for some of these companies was also related to the comment from Sam Altman. He said last week that when asked if investors are overexcited, he said, "My opinion is yes." So from that point of view, do you think that some of these valuations at least need to come off a little bit, even though when it comes to the long-term trend, you're still bullish on what these companies are doing?
Well, I think it depends on, we have to take a look at the portfolio matrix of investors globally to really comment on this appropriately. Again, I stand by my comments that AI, including AI, technology is the future. Now, is it overvalued? Well, let's look at how investors are allocated. There are certain sectors that need to have, I think, higher allocations. Energy transition, industrials, because one part of the world that we're living in right now is that companies and countries in particular will need to build a lot more resilience for their local economies and regional economic dynamics. And energy and industrial transformation infrastructure is really an opportunity. But even so, even this will need a lot of investment in AI. And the investment in AI will need a lot of investment in infrastructure. So, Sam Altman's comments are obviously a data point, but we live in a world where multiple data points from different sources come all the time. So I am not really worried about an overvaluation on AI stocks at the moment. Now, differentiation between companies within every sector is going to be and become more pronounced.
It's not a sector story.